and this is a setup that I use. It's actually a trading screen or trading setup. I'll explain it in a little more detail a little bit later. But this red dashed line that you see here is called a VWAP, or a volume weighted average price, for the last 30 days. So that takes volume here, how many shares have traded, and it takes price. So it gives you an idea over the past 30 days what people have paid in general for this particular ETF, which is the S&P 500 SPY. Price moved up and we got that breakout. It came very close to that level in which people have been accumulating shares. Now keep in mind that this has been in a downtrend for some time, so people are at a loss, and when people are at a loss and price moves close to their point of entry, they are usually glad to get out of that position and try to get out at a minimal loss. So that provides resistance, what we'd call resistance, and that's one of the reasons I think that we saw this sell-off over here break down below this support level that we have now. And now we're going to take a look at some very short-term charts that show us, like I said, nothing goes straight up, nothing goes straight down. And what we're looking at right now, a 1-minute chart of the S&P. This is today, the beginning of today. This 50-day or 50-bar moving average, price has been below that the whole time. 50-bar moving average means that basically over the last 50 bars, that's the average price paid for the stock. And everybody basically has been at a loss. Now we're seeing that price cross over that 50-bar moving average, which means some of the more recent buyers are at a gain. And as long as they're at a gain, they're likely to hold on to that position for a little bit, and that means we may see some higher prices. Keep in mind, this is a 1-minute chart, so this is not really all that important, but it's showing a slight reversal, and a reversal can of course lead to bigger things. Also, we see some volume over here picking up, so the buyers got a little bit more aggressive here around 2 o'clock today. So possibly we're seeing either just a short-term bounce, a short-term fluctuation, or we may be seeing the start of maybe some higher prices in the midterm or in the longer term. Jumping back to that heat map that I was telling you about, my heat map, we're going to look at a 5-minute version of that because we're just trying to get a gauge on what's happening in the market this afternoon. Here's 10 o'clock this morning, so you can see prices down. And so remember what I told you, blue and green is where we want to be shorting, so we'd be shorting up here around $94. And when we start to see this red over here, we want to start exiting that position, so $91. So, made a couple bucks today. That's not bad, 2% for a day. The blue and the green above the zero line, which indicates these are safe spots for short-term traders, maybe day traders, to become buyers. And when we start to see yellow, that means we're going to stop buying, we're going to hold. And when we see red, we're going to start to distribute those shares and take our profits and get out of that position. And now we're going to take a look again at that crossover system I was telling you about. But in this case, we're going to take a look at a 5-minute chart. Again, we're looking at just today's action. And we can see 10 o'clock this morning, here's 9:30, the market open. Prices have been falling all day. And one of the things I want to see is this shorter term 50-bar moving average, which is in yellow, cross above the blue, which is the longer term 200-bar moving average. We also want to see it cross above this VWAP, the volume weighted average price, meaning if prices are now above that VWAP, people are at a profit and they're less likely to sell. Again, we see that volume pickup. A couple other things that I like to use, because these crossover systems are commonly, they see a lot of whipsaws, false signals. So I add a couple other elements that I want to see. One is a crossover of this yellow indicator over the blue, and we see that happening. And I want to see RSI, which is over here, move above 0, which is starting to happen now as well. And if we back out just a little bit, you can see that MACD over here has been making a series of higher lows, which also indicates a loss of downside momentum. Now, if we lose downside momentum, here's our downside, we start to lose that momentum, that doesn't necessarily mean we rally. It could just mean that we go sideways. But what it does mean is that for the time being, at least on this 5-minute chart, and this is a couple days of data over here, here's Tuesday, it's just showing us that this downtrend right now is losing its steam. The sellers are starting to become exhausted, and we're seeing, in this case, with this green volume, we're seeing some buyers step into the market at this point. And finally, I just want to show you Warden's money stream indicator, and I'm going to show this to you on a 1-minute chart. We're going to back out a little bit. Now, the concept here is the same thing. We look for divergence. And what we see this morning, we saw a big sell-off. The indicator plunged, and then this morning from the open, we start to see some what looks like accumulation over here. We're making lower lows, series of lower lows, lower lows, lower lows. This indicator now is making higher lows, and we're seeing some buying over here. So what this tells me, and remember we're looking at a 1-minute chart, what this tells me, let's back up and take a look at a daily chart. It tells me one of a couple things. One, we may be able to see a little bit of a reversal today in prices. The first potential roadblock here is going to be this level, where this red line is, because there's going to be sellers there. Those sellers are the people who bought on Tuesday and held, and they're now at a loss. So if price comes back up to their level, they may be happy to sell and get out and not having a loss. So that provides a level of resistance, which means simply that there's some supply on the market. There's supply, there's shares for sale up here. So if there's enough demand to overcome that supply, we can see a move up. If there's not enough demand to overcome the supply, we can see a move down. My opinion is that we're probably going to see this kind of action between these two red lines. This is called a trading range, and we'll have to see what happens from there. Typically, October is the worst month, and this is usually when bear markets die. So if we just zoom out a little bit and we take a look at what's been happening over the last couple months or over the period of this year, we can see prices have just fallen, and now we're starting to see a trading range over here. This big red volume is basically it looks like capitulation, which means pretty much everybody who wants to sell and get out of the market sold at once, and they got out. So if there's not a lot of sellers left in the market, that means there's not a lot of supply on the market. If we can get into a situation where there's more demand than supply, prices will rise. And our first couple areas of resistance are going to be over here at this yellow 50-bar moving average around 110. And then we're going to have some resistance over here around 120, and then finally up here around 125. So we're going to have to see what happens, but right now it looks like maybe we're going to get a little bit of strength into the close today, and then maybe we're looking at a trading range. We'll have to see what happens from there. But that 3C indicator is a very valuable tool, and I encourage you to go to tradeguild.net. It's trade with a hyphen between guild, so trade-guild.net. Check out my links over there to Warden, Telechart, and Stock Finder. I'm an affiliate for both programs. So if you use a link from my site, they give me credit. It doesn't cost you anything more. And send me an email, and I'll give you the formulas to set up these custom indicators, and you can try them out yourself. So that's going to be it for the SPY. We're going to take a look at a couple other things in a few other videos, so keep tuned. Thanks for watching.